Today is Tuesday, August the 6th, and yesterday I said that I expected the market was going to bounce because that was such a huge drop yesterday. There had to be some buy the dip sentiment among traders, and that's what happened. But I expected that it would weaken around 11 o'clock or 12, and I expected that weakening to continue. Well, what we saw was exactly weakening around 11 o'clock, but it didn't continue. It moved back up. So we saw the Dow actually fall below yesterday's close, and buyers were there. The Nasdaq never went that low, and the S&P 500 approached it but never went that low. So let's take a look at the charts and let's see what the reason was for the buying. Why did buyers step in when the Dow hit yesterday's close? And notice the volumes are lower than relative average volume, but nonetheless, we're about average to what we've been seeing for the last few weeks. Advancers led decliners by 65 to 30%, so that is going to take the market breadth back up from this deeply oversold area a tiny bit, but it's certainly not going to reach this level. So what we're seeing is we've got this, the oscillator has been lower than this point twice before in the last 12 months. But it's also, this dip was lower than the previous 3 times when the oscillator came down. So last fall's major sell-off brought the oscillator down to minus 300. And now we are down into the minus 225, 236 area. So what does that mean, and what are the charts telling us? Well, I plotted the Dow Jones here, hoping we'd see something as a reason why the stock bounced at 11 o'clock. There was a bounce at 11 o'clock. Well, we don't see it on the Ichimoku, unless you want to say, well, we came down here and hit the 200-day simple moving average and we bounced up, and that's certainly a very good reason. Are there any other clouds that would explain this for us? 11 o'clock right in here, we had cloud support on the 5-minute, and this was a show of strength when it didn't break below this weak resistance, and that encouraged, well, we had, once we finished this candle and we had this one, that brought buyers to step in, and we slowly just stepped our way up. And then at around well, here, which is 2 o'clock, we exceeded the opening 15-minute range, came back to test it, and finished a little bit higher. So let's look at the S&P because, well, let's not leave that. Let's look at where the Chikou span is on the daily. And the Chikou span is getting resistance on the 50 moving average, simple moving average, but the EMA is also there. So that would be pretty strong resistance. And we're seeing the same thing with the S&P, where the Chikou span gets resistance on the 50 simple, but it broke the 50 EMA. What does that tell us? That could be important enough resistance for tomorrow to see some sideways action. What happens in the cloud is you typically see sideways action. So imagine an airplane flying in the cloud. You can't really tell where you are. You don't know where the top is, and you don't know where the bottom of the clouds are if you're a passenger sitting in business class. So we could see some channeling as it tries to find its way up or out of the cloud. I would not be convinced that today was a live cat bounce. It's to be determined if it is a dead cat bounce. Caterpillar was up 0.35%, just managed to hold on to this trend line from last November, which was also the top of this gap, which gave it some support. That's a gap that goes back to July of 2017 that hasn't been filled, but buyers were sitting on top of that gap. There's nothing can be said good about Caterpillar as long as there's a war with the Japanese. and the government is not spending on infrastructure. Gold stayed within this channel, and the reason I drew this channel and tweeted it out this morning is because that's what followed the last bull flag pop, was a channel and then a big rush up. Now we've got the bull flag again, and we've got the channel forming. So let's keep an eye on that, and we've got breakout here at 28.92. That's been flagged for an alert. Whirlpool, nice day up today, broke over the 200 exponential moving average, but really low volume. Look at these two green days here, below the 20-day moving average volume. So this is an interest rate sensitive stock. Let's wait and see what happens there. I am still long, but I am short the 130 calls because I was really guarding against downside, and I was determined not to lose any more money with this stock. Tomorrow is Wednesday. We'll see what happens. I may have to roll quite a ways out to stay in the game with Whirlpool, but we have this trend line which has been so important for us starting back in May, and you can see all the numerous times it tested that trend line, then came back to look for support on the trend line a couple of times, and now it's looking at that trend line for resistance, and that would be around 139. WDC up a little bit, but a pretty near perfect doji with not much of a difference between the open and the close. But the stock did end up overall. Pretty wide-ranging day right in the middle, so buyers are not convinced, sellers are not convinced, and it was a low volume day. T, our 6% dividend, had a nice day today, up 0.63%. U.S. Bank recovered a little bit. Banks are very sensitive to interest rates, so lowering interest rates is not going to be good news for them. What's going to happen tomorrow? First of all, the VIX, the volatility index, spiked up yesterday to 24, higher than May, but way, way below what we saw in December. So we don't have the December fear in the market yesterday. So while everybody was saying, oh my God, this is terrible, take a look at really what it meant to us. Yesterday we pulled back to eliminate any gains that we had in July. That's not, so we lost a month of progress. That can be made up, but I really don't think it's going to be made up in the month of August. Too many people on vacation, too many uncertainties. Trump tweeting today that money is pouring in from China is just total bullshit. And the market knew that. So all we saw today was just a 1.3% bounce after yesterday's huge loss. We still have an inside day candle. I don't expect very much to happen tomorrow. I got rid of some short Apple puts and I swallowed the loss. Not that I'm bullish on Apple. I just want to save my cash. I've had a good year so far, and I want to keep it that way. It was much better before Thursday, but it's still what I would call a good year for me for trading, and I'm going to keep it that way. And right now that means holding on to 40% cash.